Hello everyone, I'm Tyrell Chambers. Thanks for tuning in to the Chambers channel. If you don't mind delicately tapping that like button, smashing the subscribe button, and tapping notifications so you could get some more of this content. Hey, what's going on you guys? Welcome back to the Chambers channel. So I'm going to be discussing assets and what that means for your financial future. First, before I get started, I just want you guys to know I really appreciate you guys coming back to look at this video. So when I'm walking around my neighborhood, I am constantly asked, hey Todd, how do we get started in investing? They may have read an article about stocks, cryptocurrency, or they may have even gotten some information from their friends or family. People aren't familiar with the term assets because they're not really looking for it. But you can find assets anywhere. You don't have to look far. An asset is anything that you buy that you have the expectation that it'll be more profitable in the future. In general, the goal is to buy assets and not liabilities. A liability is the opposite of assets. A liability loses value over time and could potentially go to zero. I would say that there are all sorts of types of assets out there. Some of the assets I think people think about in general are commodities, real estate, even currencies. Putting money into a family member's business is considered an asset. Some of the drawbacks of putting money into a family member's business is not doing your own research or them not having that much knowledge on what they're doing in their business. But there's another way to buy into a business that might not require that much capital, and that is stocks. The definition of a stock is any purchase in a business. You're essentially becoming a business owner when you buy shares of the business. So two reasons people typically buy stocks. One, it goes up in value, or two, it can pay you out money in form of a dividend. So the price of a stock will go up in value based on a company's performance. If the company is doing really well, then the stock will eventually go up. A company that's doing really well and has a lot of profits, but not that much growth, will be paying you a high dividend. The drawback to buying stocks is that a company could do poorly. They can even go through bankruptcy and you'll be stuck with the bag. So the drawbacks in that would be your stock going down to zero. It is so important to research companies before you put money into it. It is important to do your research before you put money into a company, as well as pay attention to the company that you own. Everybody knows the terms stocks and bonds, but I'm going to break down to you guys what the term bond really is. Bonds are essentially guaranteed loans that you can buy the return on. A bond can come from the government or a company, and they usually use it to raise money for a project. A bond is considered a safer form of investment because governments and corporations are usually good for the loan. Most experts think a good balance of stocks and bonds is a diversified portfolio. Another popular type of asset is real estate. There are two reasons why people typically buy real estate. One of the reasons is you rent out the property and you get some income from it, sort of like dividends. And also, the property may increase in value over time, sort of like holding on to a stock and then increasing in price. Real estate usually requires a lot of research and maintenance and can have a lot of high startup costs. But real estate often gives you a tangible asset and numerous tax benefits. We'll be covering all of that in another video. The next asset is currency, the value and types of money. You can trade one currency for another in hopes that one of the currencies increases in value. There are many factors that can influence the value of a currency. That could be inflation, the nation's economy, or some political factors. When you trade currency from one nation to another, we call that foreign exchange or forex. Another popular form of currency trading is cryptocurrency. It transcends national boundaries and is essentially decentralized, so no government agencies control it. It also allows advanced digital trading. Some other types of assets are available to you, including commodities. Commodities are raw materials that get used in manufacturing, like gold and aluminum. And if you ever seen the movie Trading Places with Eddie Murphy, they were trading orange juice, and that's also commodities. Another asset could be collectibles. Those include rare coins, sport cars, or even sneakers. So no matter what asset class you decide to invest your money in, it's going to require a great deal of research. And I hope I've covered everything and loosened up your confidence when it comes to investing in asset classes. Thank you for coming into the Chambers channel, and I really appreciate you guys. Make sure you hit that subscribe button and hit the like and turn on your post notifications.